One, eight, two.
There we go, I recorded. Right, thank you everyone for joining me for today's roundtable, where we're going to be reflecting on the funding landscape of 2025, and then obviously looking forward to 2026 and getting some of your expert opinions on that, especially ahead of JPM and Biotech Showcase. We know that that's a really busy time of year. So I first of all want to thank everybody for joining me today. My name's Millie Nelson. I'm the Partnering and Investments Editor of Bioeconomy, which is a B2B online news publication. And we launched around a year ago, really, a year and a bit ago. So it's great to have you all here. I know that we have a short period of time, so I definitely don't want to take up the session with me talking about me. But what I will do is hand over to you to introduce yourselves, your organizations, and your roles there.
Okay, well, I'll kick off. Hello, everybody. I'm James Allers with RegCell Inc. Probably the earliest stage company on this call, I assume, today. I am RegCell. We're getting ready to do a Series A financing during 2025, but we're a company that's based on regulatory T cells or Treg biology. The company was actually originally founded in Japan by a group of investors there who have taken the position that to grow this potential big idea company into something more substantial, it made sense to transact in a way where we converted our the Japanese company into a U.S.-based company. So that transaction happened in February of this year. So now we're getting ready to move forward. What we're doing is it's a pretty big idea kind of company versus a very specific asset with a very straightforward clinical hypothesis. We are exploiting the work of our founder, Professor Shimon Sakaguchi from Kyoto, who is actually credited with the kind of the original discovery and characterization of Tregs back in the 90s, and just this last October was awarded the Nobel Prize for that discovery. So a little bit of wind in our sails getting out to do the Series A. But yeah, so being that we're early stage, I'm very much in that fractional CFO role, but hopefully things and activities pick up a lot in the coming year.
So I'll kick off after you, James. Thanks for the introduction there. Felipe Duran, I'm the CFO of a company called iBio. I'm probably the company that's been around the longest on this call. We were actually founded in 2008. And from 2008 to about 2015, we operated under a BARDA contract to provide vaccines to the U.S. Army. In 2015, the company became a CDMO and operated as a CDMO until 2022, when Martin, our CEO, and I basically took the reins of the pivot. We acquired a platform, an AI machine learning platform, in 2022, and that's really what has propelled iBio over the last 2.5 years. We are an antibody discovery company now that focuses on hard-to-drug molecules, using this AI machine learning network to basically uncover biology that's either validated or non-validated. We try to stick to validated targets. And we have currently 3 assets in the cardiometabolic obesity space, kind of having a portfolio view outside of the GLP-1s, right? We tackle muscle loss, we tackle bone density loss, and making sure that we are the next generation of cardiometabolic obesity assets.
I'll go next. Robert Hoffman, CFO of Cytodyne. I joined back in May of this year. We're still in 2025. Prior experience, just to touch on, because it's important to fundraising, is I took Arena Pharmaceuticals public. So I joined in 1997. I left in 2015. I like to joke I raised $1.2 billion during that period, but I also spent $1.3 billion, but nobody ever counted the other side. So, it was a different time. But I joined, I really thought I had actually retired for a period, and I thought that the data around what Cytodyne's working on, they did a retrospective analysis of 28 patients. And what they saw was that 5 of 28 women who took leronlimab, which is our lead asset, and then transitioned to an ICI at the higher dose, they're actually alive today after 5 years. I looked at it, I thought that was really, really interesting. Now we just have to prove it prospectively. We have an ongoing colorectal cancer study that we're working on currently, and we're hoping to get back into the clinic in triple negative breast cancer upcoming here. So I have probably a different perspective than most because we're an OTC company, and this is my first OTC company. Way different challenges that I'm working with now that are new to me, but it's drinking from a fire hose. So I'm happy to talk about that when we get into financing here.
Thank you, Millie, for pulling together this panel. Nice to meet everybody. My name is Paul Lytle. I'm the CFO of Actuate Therapeutics. Actuate actually went public last year, so August of 2024, and they're focused on areas of high unmet need and very difficult to treat cancers. Our lead product is elraglusib, and it's currently in first-line metastatic pancreatic cancer. And this is one of the deadliest cancers with life expectancies measured in weeks or months. And this past year at ASCO, we had an oral presentation on our phase 2 data from a randomized trial in 286 patients with elraglusib plus gemabraxane versus gemabraxane alone. And the data showed that we had a 40% improvement in median overall survival and a 100% improvement in the number of patients alive at 1 year. So if you look at the control arm, which was chemo only, 22% of patients were alive at 1 year. We had 44% of our patients alive at 1 year. So very promising results in this difficult to treat indication. We are scheduling meetings with both the FDA and EMA in the first quarter of next year to advance the program into phase 3. And I thank you for putting us on this panel. Thanks.
Thanks, everyone, and thank you for introducing yourselves. I think it's going to be a really interesting discussion because everybody's hopefully going to be coming at it at slightly different angles with different backgrounds and whatnot. I thought it'd be great if we could start off with, and this is quite a broad question, I really appreciate that, but as you're all coming from different points of your companies and respective to the part of funding and the modality you're looking into, I thought it'd be great if we could kind of get a general reflection of how you found 2025's funding landscape, whether that be any key trends you've seen, challenges you've seen. If you have any positives, please throw them in there. I do understand that is very broad, but I thought it might be good if we could just encapsulate, the general outlook you have for as we approach the end of the year looking back.
I'll kick off. I feel, we had a positive 2025. I think Robert said something that kind of hit me, which was drinking from a fire hose. So we kicked off in January to do a large raise. And in March timeframe, we were almost there. And then the Liberation Day happened, and most of the investors walked away because of the volatility in the market. That made us pivot really fast. We had to actually induce some of our warrants that we had outstanding just to survive. And most of the investors that we had talked to, stated, okay, we want you to, we want readout from third parties. And that readout was going to occur in ADA. And then post ADA, with all three of the parties reading out positively, we then kicked off again. And that allowed us to raise up to $100 million in August. In a very unique structure. It was $50 million. It was $50 million of pre-funded warrants stapled to a Series G warrant, which then is stapled to another warrant that provides another 25% of the 100. And looking back at that, we were one of those first deals that occurred post everything, the volatility in the market. And since then, there's been a lot of deals that have occurred, and the markets seem to be opening up. So. We drank from that fire hose this year, Robert, trying to figure out what to do and how to manage the different situations out there. But we'd love to hear from the rest of you.
Yeah, I'll tag team off of that. I feel like it's almost the have and have-nots. So I sit on 3 outside boards as well. One of them is a commercial stage company that has seen really great trends in their drug, and the stock has almost quadrupled since the beginning of the year. So they've been able to raise lots of money in the public market. The other couple are entering the clinic or in the clinic, and it's been really difficult. For myself at Cytodyne, I was able to negotiate a deal that put a Yorkville a SEPA in place with no money up front, which is really helpful because then the full control is with the company as to when we draw down on that or how to utilize it. So just looking at different ways to fund the company. We have a ultra high net worth individual that has committed funds to the company, and we're looking at other ways to kind of think creatively out of the box. We have about $3 million worth, it's like little numbers, but everything all adds up. Warrant exercise that we're expecting over the next 3 to 6 months. So kind of cobbling it together, and I'm sure we'll talk about 2026. I feel better going into the new year with what's going on, and maybe some of the uncertainty around a change in administration and just trying to figure out the pathway and how to work closely to figure out the path forward and whatnot there. I think was a challenge in 2025, and I think we're getting more clarity in 2026.
Yeah, I'll jump in next. Robert, I agree. There's have and have-nots. I think the first 8 months of the year through August was pretty shaky for biotech overall. I think if you had late stage assets, phase 3 assets, I think you did pretty well. I think earlier stage was a little more shaky. If you look at the IPO market, at IPOs with 40 million or more in proceeds, there were 17 of them last year. This year we only had 8. And then if you look at kind of the time frame from the period of March through August, there were 0 IPOs in that category. So it's pretty shaky for the IPO market overall. I think September, October, November, we saw some great green shoots of opportunity, a lot of new investment coming in. And I'm hoping that'll continue into 2026, and it sounds like it will. But we're positive on the outlook going forward. But I think our experience was that we saw a lot of investors looking at a lot of deals, but investing in few. And as the CFO, you're continuously in financing mode. So you see this, you talk to the bankers say, yeah, they're looking at 12 deals right now, but they're not doing anything. So, but I think going forward, I think next year, I think it's going to look very promising for biotech.
Yeah, and I come at this as the private company on the call, so I'm very much focused on the venture capital market, which the challenges of company formation in this environment are well known, so I won't go into that. But as I've observed, and been through this for many years, we're definitely at a point where the onus is on management to bring forward not just kind of a great idea but to actually come forward with a business model. So we've been focusing on a couple different aspects of for private companies being able to seek alternate forms of funding, whether it's through philanthropic organizations or government grants. You're able to come up with a totality of capital efficiency that you can bring forward to a shareholder that makes more sense, other than just, wow, this is great science, be prepared to write a lot of checks over an A, B, and C round funding. We for example, with RegCell, like I say, being that we have sort of our origin story is that of Japan, we've heavily leveraged it's become sort of a term of art, a quote AMID grant. What that is that's the Japan Agency of Medical Research and Development, and they have a relatively lucrative program. So that's an example. There is we have an outstanding grant right now to fund a liver disease program we're going to put into the clinic next year. And the way that grant works essentially is it's a non-dilutive funding, but it's a matching program where, to the degree we bring forward capital from AMID qualified investors, which tend to be Japanese venture capital and financial institutions, but ex-Japan investors are catching on to this and going through the process now, becoming AMID certified. To the degree you bring $1 in from that pool, the grant will match 2. So it's actually a 2-for-1 non-dilutive financing, and that relatively quickly can turn sort of a platform story into a clinical story that once again is much more capital efficient. So that's just one approach. But again, there's, being in that fractional role, I have a number of clients and people are leveraging, kind of the venture philanthropy networks, et cetera, and anything you can do on the margins of your business to, quite frankly, get to a lower cost of capital is much appreciated by investors. So it's not just great science, it's, good business model thinking.
Yeah,
Yeah,
no,
no,
oh, sorry,
I was going to
go
say,
ahead.
I echo Paul's sentiment in terms of the banks and the ADHD from the investors, as I've been calling it, right? when we were raising, it was the same type of situation, and I think therapeutic area plays a lot into it, right? I think I'm a little lucky that obesity is in a very pretty hot space, right? So I think that also has been a challenge, right? All three of you guys are in oncology to some respect, right? Which is a pretty tougher environment right now. So
we're actually in autoimmune.
Oh,
I know
autoimmune. Sorry.
Yeah.
Yeah.
You hear T cells, et cetera. But
I think it's like we just saw Capricorn this morning raise 150 million, but that was on a phase 3 data that was very promising. In I think it was Duchenne's muscular dystrophy.
Yeah.
So pretty tough indication, but I think those type of events are driving a lot of these big financings.
Mm-hmm. No, definitely. And I'm really glad that you brought up there that, there's that volatility, but then that also pushes you to look at different ways of seeking that funding, different ways of, keeping the company alive. What I thought might be interesting is obviously you all being in CFO positions. How do you navigate being able to pivot that way? I can imagine that being quite difficult. Felipe, you said, we had 3 investors there and then it was like, oh, you're gone, and then having to make sure that you can, continue. How do you do that, and how do you maintain that? I'm assuming you need to maintain positive morale within your teams, that this is, we've got to keep going. How do you all navigate that?
I mean, I'll start. I just never give up. I'm typically working on 4 or 5 different opportunities at the same time, and they run in parallel. Some stall, others start. I'm communicating with the board like, okay, well, this one's slowed down, but this one's moved up, and so we're always looking. But back to the last conversation, I think I'm going to add an AI to our company and just call it CytoDyn AI, and maybe we'll raise more funds that way. So no, but just trying to track down anything and everything. Like I will meet with any and every investor. It was just at Bio Europe. I'm going to Bio Europe in the spring. We're doing the JP Morgan week. I never not meet with someone. It may sound like a harebrained idea, whatever it is, and sometimes it actually turns out, but I can check it off if I run it down to the end and whatnot. So
that's exactly what we do. If my CEO tells me now we don't like to use the AI term, so we're opposite. Unfortunately, we use AI and machine learning, but we don't like to use that term. But yeah, we do the same, Millie. We meet with everybody. It could be the smallest family fund to the smallest bank. We'll have a conversation because you never know what kind of door is going to open up. And, we need to be nimble, right? And, perfect example is, as I stated, when the funding dried out because of the volatility in the markets, we went to our banks and said, we need to survive till at least the readouts. What can we do? And that was the inducement of the warrants, right? We're not afraid of dilution. We're not afraid of creative ways to keep the company going. We don't give up, right? And then in terms of the team, I think you need to continue to keep that positive morale. Our management team has proven to the rest of the organization that we can do this, that we can survive, and I think that goes a very long way. My whole team has been with me since I started. No one has left in these volatile markets, and the accounting functions, as you guys all know, are pretty hot markets right now, right? So it's easy to jump ship if needed.
Yeah, I think back to the comment about as a CFO, what you can do to bridge that gap, and it sounds like Felipe has very spot on experience with this. But I've always talked about this. People talk about creativity in transacting. And if you've been in this business long enough and you can really think about the underlying value, a lot of, when we start to put complexity and structure into transactions, it's not just for the sake of complexity, right? It's for the sake of, it's kind of Adam Smith supply and demand. There's an investor over here who's interested in putting capital to work in our business, and we want their capital, but buying common stock at X dollars a share, we're just not able to get that to close. So the CFO can step in and figure out the way to align the interest of the company and the share, and that potential investor, and come up with a deal, right? And I think that's where, where a CFO can be super valuable is figuring out a way not to. It's less about pitching the science. We've got brilliant people we work with. It's building that bridge structurally to bring the two together and get a deal to clear.
Yeah, I think from Actuate standpoint, we had to make sure we had multiple tools in our toolbox and be flexible and focused. Going public in August of last year, you're not S3 eligible, so you have a whole year of cooling off before you become S3 eligible. So we put a committed equity facility in place, and that operated almost very identical to an ATM type vehicle. And then when we did become S3 eligible, we just put a $250 million S3 in place, shelf, and then just put a $100 million ATM in place recently. So I think having many tools in the toolbox gives you opportunities. I think also you need to minimize your banking clawbacks and your engagement letters with banks to make sure you're not sitting in a bad situation where you can't exercise discretion on funding. So I think that's also important. So.
Oh, that hurts, because I've been locked up with banks before, and you get stuck, and it's bringing back memories. Just a couple things I had before, Millie.
No,
so
go
one of
ahead.
the companies, close friend of mine, actually, talking about creative financing, he closed on a deal where he actually took gold as the investment.
Wow.
And then he had to turn around and pick up the gold and sell it. It's a biotech company. And I just thought it was really creative. He kind of walked me through how it worked. But the individual, again, high net worth, didn't want to give cash. I don't know the details behind it. But, the other thing about keeping the folks on your team motivated, my last company I was CEO of, my glioblastoma drug failed. And I really felt like something was missing. So that's why I took this opportunity. And I was just showing the folks in my team data that we have that's coming out. It's really, really interesting. And in the next couple of days, I'm going to show, either Friday or Monday, we have some patient testimonials that have been done that I haven't watched. I'm going to watch with them, but the other folks on my team watched them, and they said they're real tear jerkers, and they're really incredible. So we really try to keep focused on the patient and why we're in this. Sometimes as an accounting group, you forget, like, you're processing. So then I'm going to try to get the CEO in to talk to the folks about the science. He's really CMO, CEO, and just why we're in this. So I think that's motivating for me, and I think it's motivating for my team as well.
No, 100%. That end goal of what you're trying to achieve here, I'm sure, is always front of mind. But I can imagine in those stressful, tough times when you're trying to focus on that next point, it can, that message is still there, but it's important to keep reminding people of that whilst you're doing all the hard work that you're doing. I think one thing that you all said there in slightly different ways is that, keeping those connections is really important. Whoever they may be with, you don't know what doors they're going to open. Always staying flexible, making sure that you're willing to make those changes if you need to make those changes, especially in a volatile market. I can imagine that changes are happening multiple times throughout the year. And it seems like people have had, tough times, but it also seemed that everybody was looking at it with a positive lens of what's coming in 2026. So I feel like now would be quite a nice time for us to move into a forward-looking discussion. Now that we've reflected on what's happened some of the experiences you've had with your own respective companies, what are you thinking the funding landscape might look like next year? If you were to imagine that we were hosting this again in December 2026, I'm not asking you to get a crystal ball out, but if you could put a bet on it, what would you bet that you might be saying, I'm reflecting on this is probably most likely going to happen? Or even if there's just something that you think, I can see things are going to be returning, things are going to be a bit more positive. Or if you think there's going to be some of the same challenges. I mean, we know that things change, but they don't always change as quickly as we'd like them to.
I'll go first because I've agreed with everything everyone said except for Felipe at one point where he said oncology is a tough, well, maybe I agree with him, but I think going forward, I think it's going to be interesting. So I look at Merck, for example, and there's some other companies that they need to build out their pipeline. They did the deal with Verona to kind of get away from oncology, but they also have a cliff coming with Keytruda. And I think for us, that's actually an opportunity. Our drug works. We believe it's going to be potentially a standalone agent, but also work in combination with checkpoint inhibitors. And so we're really focused on monotherapy, then, like I said, working with inhibitors. So I view the landscape potentially and kind of looking at companies, larger pharmaceutical companies, is doing a nice partnership. So that would be incoming money that I'm working really hard. As in addition to doing the CFO work, I'm also taking on the business development efforts. Like I said, I'm Bio Europe, both the fall and spring. So I view that as a significant upside. I look at the obesity companies, for example, too. They're flush with cash, and Lilly isn't just staying in obesity too. They're really expanding, and so I think it's going to really free up this year. And from us personally, we just have lots of inflection points coming up, which is really, really important as well to have these. I always have this focus on early on communicating with investors, laying out what those milestones are in the future, and having these. I have one slide, and I tick the box when we check them off, because to me it builds credibility and makes them more accountable to investing in the future, that they understand the story early on, and then as you move along, you show them you met your milestones. So.
Yeah, 1000%. I feel like I've quite a lot of the investor talks I've been to events this past year. Nearly every investor, when they said, "What can someone do to show you?" They've said, do what you told us you're going to do, and show us that you've done that. And that gives that trust, and trust is such a huge part of getting that funding, and also getting that continued investment, where it's not a one-time thing. They're going to continue to support you through your journey. Exactly. Which I can imagine is so important when it's not a quick road to commercialization.
Yeah, it's tough to build, and it's easy to lose too. So you just gotta be careful.
Yeah.
Yeah, I think if we were going to sit here a year from now and kind of think about what does 2026 look like, I wish I knew. I mean, to be honest, that I think all of us would be rich men, right? We wouldn't be in our current roles. If you asked me last year at this time, I thought 2025 was going to be very optimistic, right? And then there was a lot of ebbs and flows. I do think that a lot of the deals that occurred this year has freed up some capital, right? The Metsera deal. Robert also mentioned the Verona deal, right? There's been a few others, right, that have opened up capital for 2026. If the interest rates continue to drop, which there's indications there, that's also going to help. I was actually at a conference at a panel with our PR firm on Monday, and Carl Gordon from OrbiMed spoke, and his first words were, "Biotech is back," right? And I was sitting next to a BD head from a company, and he was like, "I don't know about that." And I'm like, "Well, I think we are, right? I mean, look at the XBI where it sits. I think there are going to be opportunities, and I think there'll be continued M&A going into 2026, because most of these companies have capital, and that will allow investors to take a little bit more risk. So I'm pretty bullish on 26.
Yeah, we're cautiously optimistic for 2026 also. I think a couple of drivers here. I think we're anticipating lower rates. December 10th, I think we're expecting another quarter point decrease. You got Jerome Powell, term is ending in May. I think the Trump administration is looking to seriously cut rates. I think that drives more innovation and investment into biotech, where they're looking for higher returns. I think VCs can borrow at a lower rate and hopefully deploy that into higher investment incomes in biotech. We're also hearing that generalists now are getting involved in deals. And when generalists start investing in biotech, it seems like all boats rise. So they're kind of the rising tide for all biotechs, and we're hoping to see more of the generalists get involved in 2026. And then I think we're expecting another pretty strong M&A year for 2026. We talked to Lazard, as one of our bankers on the M&A side, and they're pretty bullish. 2025 was a very good year. 2026, I think, will be just as strong. You have about, I think they told me there's about $275 billion in products that are losing patent exclusivity by the end of 2030. And I think Robert, someone mentioned that Keytruda and also Opdivo were basically going off patent, I think, in 2028, and that's about a 40 billion in revenue. That's going to be that they're going to need to replenish that revenue with new products. So hopefully M&A is another big win, and that capital gets recirculated back into the market. So hopefully most of us biotechs here get to enjoy some of the fruits of those deals.
Yeah, I share everybody's I like the guarded optimism kind of stance. At the end of the day, we've, over the last couple of years, everybody on this call, I'm sure, has at multiple times talked about green shoots, and we've been head faked by those green shoots, right? And even this year you started to see it where earlier in the year you're like, all of a sudden you wake up and you think, wow, biotech's outperformed the S&P 500 for the last 3 months, and then pretty soon it's wow for the last 6 months, and then it's year to date, and now we're now biotech's outperformed the broad market for more than a year. So and those are reasons to be optimistic. Now, how does that trickle down to the funding of small cap public companies and where I sit in private companies? That takes time too. So I'm always happy to share either my relative optimism or pessimism about the market, but I always have to qualify with it. It has zero impact on how I plan to fund this company. I plan to fund this company like the market's going to remain just as tough as it is right now, and bring forward a business model that is consistent with this environment. Hey, if at the end of the day, we raise 40% more capital than we were targeting at a 20% better price, great. I'd love to be wrong, but you always have to be. We can talk about optimism and green shoots. It's almost like cocktail party conversation, but when how is it really? Does it ever impact how we're really going to behave? Is any CFO on this call, if you need to go out and do as a public company, go out and do an at the market or overnight transaction because you need X million dollars today and the deal's available, are you ever going to say no because you think the market's going to be up a month from now, 6 weeks from now? No, you're going to do the deal.
Yeah. Number one rule in biotech is that you never turn away capital.
Exactly.
No, that makes complete sense.
But you do see there's an index, an ETF called the BBC, which is clinical trial based company. So they're not commercial. They're all clinical trial based. There's about 112 entities within that index, and it's up like almost 60% this year. So it's a good indicator. All the other indexes, the XBI, they're all up in the 30-35% range this year to date. So.
No, it definitely sounds like there's that positivity in there, but at the same time, I completely appreciate what you're saying, James. I guess it's not probably the smartest thing to always look into things like this is going to be the best, and I don't need to plan for all of these things that could happen. I'm just going to go in blind. Like, that would make no sense in terms of how business operate. But it's great to hear all of your perspectives, and I also think it is, sometimes quite nice to hear some of the positive things, or at least having that optimism and that hope, because of we've heard we've heard the word tough a lot this year, I think, when people have been talking about funding and volatile. So it's nice to at least be able to have an outlook of 2026. Things might be getting better, and also hear some statistics that kind of support that M&A is getting back up. And we don't know whether that means it's going to be a really positive run in 2026, but we can keep our fingers crossed that it might be a little bit more positive and less tough than some people might have found it in 2025.
And just to be clear, you have a group of people who've been CFOs of biotech companies for a long time. So by definition, we are optimists.
Yeah.
I mean, it's a business where, you can do everything right, but at the end of the day, Mother Nature decides if it's actually going to be lucrative. Yeah. So we have to be optimists.
It's either that or it's a definition of insanity, right? I'm not sure.
Well, I was going to say something, James and Robert, that we're all positive right now, but I guarantee you, all of us have some risk mitigation plan in the background, right, to ensure that we survive, right? We all are, right? We know what could happen very quickly. So.
Yeah, no,
it's true. Like just in terms of, we're always talking about fundraising or when revenue generating companies, but I like to look both sides of the equation too. You got to look at expenses and where you can always where you can cut or just make sure that you're expending cash appropriately. So it's both sides of the balance sheet, so to speak.
Yeah, I think you got to, as everybody said here, you got to stay nimble and adaptive to change no matter what, especially smaller companies with limited resources. You got to manage your burn rate, your runway. You can't overextend yourselves and you can't do too many things. You got to stay focused on the missions, focused on the catalysts that are really going to drive your next investment.
No, that makes complete sense. I know that we've kind of spoken this, I'm kind of bringing the conversation back a little bit because we've spoken about, having lots of different tools in the toolbox, having that ability to be nimble. Felipe, you just mentioned there your risk mitigation plans. I was wondering if we could maybe have a tip from each of you of those. I know you're not going to give away necessarily all of your secret recipes in the cookbook about what you do to navigate risk and whatnot, but what are, if you had one tool that you're allowed to bring out of that toolbox, what is the one thing that you always have in there to help you navigate these tough times? And also with the positive times, I'm sure that even when you're securing that funding, it doesn't mean it's easy or that the process is simple. I feel like a lot of the time that people speak about fundings, they say, actually you might have started those conversations 4 years before, and then you've had to get all of these inflection points and proof and earn that trust. Is there something that you would give as a piece of advice to the people, whether it's funding in tough times or funding in positive times, as to what they need to do?
I'll start.
Go ahead.
Sorry, go ahead, Paul.
I don't think there's any magic sauce or secrets here. I think number one, everyone should have some type of S3 ATM type vehicle in place to maintain that flexibility. You never know when your stock's going to shoot up 20-30%, or you're going to hit great liquidity and have the ability to raise capital on a dime. And you got to have that instrument where you can raise capital almost instantaneously without having to call bankers and get into a engagement letter, and you may miss the opportunity. So I think being ready and having a real flexible type financing vehicle at your fingertips to execute on a moment's notice is important.
I was just going to say flexibility. I got to run to the door because the Brinks truck is pulling up to my house to pick up. No, I'm teasing. I think just running down every opportunity. I just don't, kind of what I said before. I don't turn anything away. But to that point, too, I think relationships are really important along that. You just touched on it, Millie. There's folks that I haven't talked to or I keep in touch with, but haven't had a business communication. I talk to them frequently. And things come up that they call me and say, hey, I know this opportunity of, this, and this company's doing this or that. And especially being OTC, a lot of the bank relationships I have won't bank OTC companies, but I still talk to them all the time. In fact, one of them gave me a couple recommendations that I ended up doing something with because we're friends. And so, just keeping every avenue open. I try not to close any doors in that regard. So it's just kind of what Paul said, just being relentless and moving forward.
Yeah, I agree with Paul. You need to have an S3 out there. You have to have some sort of ATM facility or something like that. I also agree with Robert. You need to have those relationships. I think that's one of the reasons iBio is still around. We kept those relationships. We've been able to use those friendships, right? Because a lot of the times, to Robert's point, when you're a market cap, they're not going to talk to you, but they might help you. And I also think, you need to be able to identify and provide to your CEO and CSO that you need to fail fast, right? Let's pivot quickly, right? I think that also needs to be done. And I think sometimes that comes from a strong FP&A background and a strong FP&A team to be able to have different scenarios. I think those three things married can help you be nimble and kind of figure out the challenges that occur.
Yeah, and again, I'm coming from a private company angle, so I guess I don't get to have a shelf. But for me, I guess, and it's interesting in a difficult market. I think it's really important for us to continue, though, to listen to what the investors are telling us, because I do see people. I've already heard the definition of insanity comment used on this call, and I see that where teams go out and, for lack of a better term, they're selling the same thing over and over and not getting a deal done, but chalking it up to bad market conditions, right? Hey, even in the worst markets, deals get done, stuff gets funded. And you really have to listen hard to what you're hearing back where the pushback is. We talk about being small biotech companies so we get to be nimble, but it's amazing how often we're not willing to actually act on that ability to be nimble. And you have to react and really listen to the market and bring forward something that makes sense in the given market.
Well, it's funny you say that, James, because when we raised, we were starting with our lead asset or our ex-lead asset, and we started listening to the investors because the investors were saying that one's exciting, but the one you have behind it that's a year behind, that one's the one we're interested in, right? And we actually raised capital on that asset, so we're now another year behind, but we listened, we kind of took in all the feedback, and at the end of the day, that's what allowed us to raise the capital. So we kind of the fail fast approach, right? We tried to do it with X, we had to do it with Y, right? So
yeah, I assume you probably a little bit ill-informed on this, but in your space, it was probably interesting in that, because if you roll the clock back a year, everybody was talking about, weight loss being driven from X% to Y%, and then as an observer somewhere in the middle of the year, it all became about, well, wait, let's X% is pretty darn good. Let's improve the quality of that weight loss and maintain lean body mass and bone mass, et cetera. So yeah, I could see where again, you have to listen to what the market's telling you.
No,
Well, it's funny,
really
back,
sorry.
back when I was at Arena, we actually got our obesity drug approved, I think in 2007 or 2008 or whatever the case, and we're just way ahead, but the weight loss is so different from today. But, just to tack on, I lost my train of thought here now, talking about obesity, but oh yeah, James, I wanted to tack on what you said. I often hear from management teams too that they get feedback from investors and they say investors just don't understand. I think that's really a fatal flaw, because I always flip that back and say, you got to make them understand. So your communication skill needs to change in order to appropriately communicate your story to them, that they understand it. I think that's a kind of a cop out in that regard if you say that. So fully agree with what you said, James.
That's great. I know we've only got a few minutes left, and time always goes really, really quickly when there's lots to talk about and lots of things to cover. I did really like what you just said there, James, about, even in a bad year, things get funded, things go through, things keep happening and things are always moving, which I think is important to remember, else no one would be doing this. If it was a bad year and there was no chance, it wouldn't be happening. So I think that's really important. What I would like to do is open up to everyone now if they have anything specific that they'd like to mention, or if they feel like there's a certain message or a reflection that they want to bring up, whether there's been a high point of the year that they feel they haven't been able to mention. Just because I know, you know, I'm not always going to ask every question that's in the front of everyone's minds, and so I'd like to give this opportunity for anything that you'd like to end this roundtable with before I say thank you to you.
I would just say one thing, that biotech is the land of opportunity. I think Felipe mentioned Metsera.
Right.
Metsera went public in January, about a $1.5 billion pre-money valuation. And they sold in November for a $7 billion enterprise value with another kicker on a CVR. So those are the opportunities in biotech, and I think that's why we're here. And we're here really to help patients. If you look at our drug in pancreatic cancer, I mean, that's the rewarding part of this whole job, is not is treating these patients and extending their lives, or helping them lose weight in terms of Felipe's situation, but it's really helping people in what we're doing. I think that's the invaluable part that's most valuable to all of us, is really helping others.
I would agree with that. You know, at the end of the day, it's all about the patients, and you know, sometimes you lose track of that, right? And you got to make sure that that's really the forefront, and that's really the mission and the vision of our company, right? Yeah, we're not in we're in a sexier space, right? Because we're trying to lose weight and healthier quality weight loss, but at the end of the day, you're trying to extend the lifespan of those patients. And you know, we're just excited that next year we'll be a clinical stage company, and you know, then we'll have additional challenges. But at the end of the day, Paul's absolutely right. It's all about the patients.
I'll just tack on it and say I fully agree too, that if you design clinical studies with the patient in mind and with outcomes that are helpful to patients, you're going to create shareholder value. So if you focus on the best drug for the patients, it all will kind of work out, and so that I think that's really important. So fully agree.
Great. Well, I'd like to say thank you for everyone taking the time to have this discussion today. It's been really interesting. I know that some of you got up super, super early to do this as well, so it really is appreciated. And it's lovely to be able to reflect on 2025, but also look forward to 2026 now that we're approaching the end of the year. So yeah, a huge thank you from me for all of your input and taking part in this today. It's really appreciated.
Thank you, Millie.
Thank you, Millie.
Thank you. Thanks for having us.
Thank you all for a great conversation. Enjoyed it.
Yeah,
Yeah,
great.
nice meeting everyone. Thank you.
Yeah, likewise.
Robert,